Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, July 31st, 2019. Okay, folks, let's talk a little bit about what's going on with this market. First off, we're waiting on the Federal Reserve, which will be out in about 22 minutes. Markets are very quiet. Volume is unbelievably light, but that is the way it is prior to a Fed decision of this magnitude. The Fed will cut 25 basis points. I don't really have any question in my mind because the market expects it. The Fed has become scared of the market. They don't want to roil the market because there's so much wealth in the market. So they're going to do exactly what the market commands, which is a 25 basis point cut. The question that I have is what will they say about future cuts? That's what will kind of cause the market to either rally or drop. If they're super dovish talking about more rate cuts this year, markets will likely go higher. If they talk about maybe pausing till next year, then the markets could sell off. Notice the trend line here on the S&P 500. All right, we're just butting up against this resistance trend line. Every time we hit it, we're seeing some sort of pullback. This one was much bigger, this one very minor, this one even more minor. But again, what happens on the decision of the Fed? Now, I want to talk a little bit about a couple things. Number one, there's two stocks out there that reality will set back in. I believe they're on crack, literally nuts out of their mind. I'm going to show you right now. So the first we have to talk about is Apple, folks. So Apple up still 4% on the day. This stock should never have been north of 120. It should come in. It's actually putting in a beautiful topping tail, which is a huge bearish signal. All right, now why? Well, they beat earnings, great, but their services revenue slowed year over year. All right, that's the services. Now, the services are what every analyst before this quarter was like, oh, Apple's going to become a services company with recurring revenue from these services. This is the biggest thing. And every past quarter, like last quarter, the quarter before, it was, oh, their iPhone sales sucked, but you know what? Their services did okay. And this is now can demand a higher PE ratio because their services are doing better. Well, guess what? Now it did a switcheroo. Their services did not do well. And that's the only reason the services and the recurring revenue is the only reason this stock can command a 20 PE ratio. That's it. Otherwise, it's a consumer product company. It should be trading at a 10, maybe a 12 or a 15, not where it currently is. All right. And again, that slowdown in services should freak out analysts. They're just all smoking it because all their buddies are in this stock on the long side. Ultimately, the topping tail tells all. Smart money's already starting to move out. This, again, should be a major top on Apple. Another stock, same kind of event here, but this one had earnings a few days ago. The stock is coming in down $1.10. Again, 3 down days in a row. It's going to come up to gap window, but Starbucks is another example of this. Even before earnings, I kind of went on a rant, even posted on Twitter. I was like, listen, Starbucks, a coffee company. Now, listen, it's kind of elitist coffee and everything like that, but it trades at a 39 PE. That was before the earnings pop. 39 PE. That's what high tech growth stocks trade at. And then it has earnings and goes up almost to $100, trading at a low 40s PE ratio. I mean, what kind of cracked out world are we in this market? It is totally out of whack. I mean, in a normalized market, Starbucks would be lucky to trade at a 20 PE. That's a 50% drop from here. That's nuts, folks. Okay, that is absolutely nuts. Reality will come in on both these stocks. Apple will come back in, probably go sub 200 within a couple weeks. Starbucks, honestly, should fill this gap. There'll be some support here back to where it was before earnings, but honestly, it should be back. This stock should really trade back towards $75, get back in a range. Now, obviously, it's going to take the market to have some sort of corrective move because right now, investors and fund managers are just smoking the hopium here that everything's going to be okay and that there's no other place to put the money, which is kind of true because the Fed obviously has interest rates basically at zero and they're talking about cutting today. But ultimately, it's got to change. Reality at some point, whether it's tomorrow, whether it's next week, next month, next year, there will be a corrective move, a major corrective move. And that's going to be interesting to see. So keep an eye on that. Now, going to one other stock, I gave this stock to you just recently, guys. AAOI, we bought it just the other day right down here, $9.12 exit entry. We just sold it today for a 10, almost 11% gain. Just another winner in the research center. Yesterday, we had PayPal as a short that we took profits on. That was a 7% win right there. I want to show you here, folks. Here's our website, inthemoneystocks.com, and you can just see our track record here in the research center under free market action. Here's the research center track record. I mean, I've traded multiple. Here's AAOI's today trade, like right there. Look at that, 10.5%. Then we had 2 trades on APRN, 27%, 14. AOI I traded again just last week or so, or earlier this month, 11.5%. SCO 10%. This is the verified track record, folks. You can see a few losses on there, but who wouldn't take 3.5, 2.5, 2.75, 1.6? That's fine. And here's a flattish, basically 0.01. The point is, look at the net return. Net return right there. That's everything right there, folks. That's what it's all about. So, all right, guys, on that note, I'm going to bid you farewell. Thanks, as always, for coming out. Come join the Research Center. Take the 7-day free trial while we still offer it. I'll talk to you.